Good morning, everyone, and welcome to the PivotBoss pre-market video for Friday, May 31st, 2024. I am Frank Ochoa, aka PivotBoss. Happy Friday, everyone. Before we get to the charts, I do want to remind you to go to pivotboss.com/profits for our summer flash sale on Swing Trade Pro 2.0, the 5-step swing trading blueprint. This is a 29% off offer, and for those of you who are new to Swing Trade Pro 2.0, you'll also receive a free month of our PivotBoss Premium Trading Room as well to jump into the swing of things. We have live sessions coming up for Swing Trade Pro 2.0. If you scroll down the page here, you'll see the live sessions down here coming up June 12th to June 18th, these 5 trading days here. We have live sessions that will be free to those of you who are current and new Swing Trade Pro 2.0 members. So if you jump into this flash deal here, you'll not only get the training, but you'll also jump into the live sessions. Now, again, keep in mind this offer doesn't last long here, so go ahead and take advantage of it. You're going to get all of the 10 trading blueprints in addition to the new option spread blueprints that we're going to provide at the live sessions, and you're also going to get all of the on-demand video training and the 135-page Swing Trade Pro 2.0 PDF as well. So a ton of training. Not only that, once you jump into the PivotBoss Premium Trading Room, you're also going to get a ton of on-demand training from the Premium Trading Room, including our 10-part executive training series and our boot camp series training as well, in addition to indicators for multiple platforms. So again, a ton of value here for this flash deal. Take advantage of it, and I'll see you in the live sessions. Let's go ahead and get to the charts. You'll see right here, these charts right now showing a little bit of strength here on core PCE price index data. Later on we'll get Chicago PMI as well, but these markets bouncing a little bit on that core PCE price data, and a little bit of a move to the upside here, a counter move to yesterday's mostly compressed price action with a downward bias. Now, one thing to keep in mind is we are in a current downward cycle here after this strong high. This downward trade sequence here would suggest that any pullback is likely a selling opportunity. So if price comes up here to new highs, call it 52.85 or so, that could provide an opportunity for bears to defend and perhaps swing the thing back to the other side of the range. So if we rally into the 52.80 to 52.85 zone, look for bears to trap and reverse back down. Again, in a downward cycle here, you would see bears defend into morning strength for a shot at further weakness. Now, if we do get a further downside break, especially out of this narrow range here, there's a 200-point move that could happen into the 50-50 level down below to retest the FOMC key level from May. Now, keep in mind we also have new pivots coming up for next month. Next month begins on Monday, and this is a higher value relationship, currently a bullish confirming close at the moment. If we do fail at the 5200 level, that's going to be a big time break, and that would open up the previous month's low into the 5036s. So again, something to keep in mind as new pivots come online here heading into next week and the new month of trading. Speaking of the new month, we will be hosting a monthly market outlook next week. I'll provide details for that here very shortly, but next week we will host a free monthly market outlook for those of you who want to join that webinar event. Taking a look here at the NQ, you'll see right here the NQ showing similar price action here to the ES, a little bit of a thrust reversal back up the range. This one did see some selling pressure here late in the session yesterday to kind of elongate that range. It was mostly digestive for much of the day. At the moment, again, seeing a little bit of a pullback here into the previous session's midpoint. The previous session's midpoint is 18,666 here. We're currently trading around the 18,650s. Now, again, if we come into this point and put in a strong high this morning, that could offer an opportunity for bears to defend and turn this thing back down. Now, keep an eye on that 18,666 again. If prices are going to push and find acceptance beyond the midpoint of the day, we could see a little bit more of a push into the previous session's range. But for the most part, bears will be looking to defend into morning strength. Perhaps at the top of the hour, we could be looking at a swing back down. And overall, a breach of 18.6 here would suggest further weakness that could take us back toward 17,800, and perhaps even down into the previous FOMC key level at the 17,450, 460 zone. All right, let's take a look here at crude oil. Now, crude oil had quite a bit of selling pressure here. This one kind of worked out the first 3 days of the week exactly as we expected. We were looking for price to attack the 80 price level. We were looking for a failed new high and for a return back towards 79s. And then we were looking for an inverted checkmark day that would take us to 78. We've gotten each of those, and they played out almost perfectly. For today, there could be a continuation that takes us down towards 76, although that may not happen until next week. As of right now, this market is trading right near the midpoint of the current month's range. That's the previous or the current month's high. This is the current month's low, and right now that's the current month's midpoint, and that's last price. So we finish the month here near the middle of the month. There could be an early month test at the edge next month, which means we could be looking for a push downward into the previous month's low. That could be faded back up. We could see a push back to the new high. That could be faded back into the range. We're currently range bound, and we're chopping above and below current year-to-date VWAP, which is this blue dotted line right there. So again, we're in the flow to the downside here, but we could see a little bit of chop near the center of the range until we see that edge tested early next week. As of right now, bears will want to keep 79s offered, even if we got up that high. Not sure we do, but if we did, you're looking for bears to sell into morning strength and maybe push this thing back down. Overall, still stuck in the range and looking for a move to an edge early next week. Let's take a look here at gold futures. You'll see right now gold stuck in the middle of the range overall. The middle of the range here, depending on how you define it, 2350 or so. You have 2450 up here. 2250 is way down here, and that's kind of your range. You can see a perfect D-shaped profile, and we're right at the center of that range. Again, kind of like crude oil right now, you're right between the two extremes of the current month's range on the last trading day of the month. And when you close right at the middle of the month's range, you're going to see a move to one of the extremes right out of the gate early next week. And then that move could be faded right back to the middle as further trading range action develops. If we were to see a push that takes us to the previous month's low here early next month, that could be a prime opportunity to reverse it back up and perhaps even to new highs up ahead. So right now, stuck near the middle of the range, we could see further chop at the center of this D-shaped profile. Taking a look here at the YM. Right now, the YM, very, very narrow range of price action the previous session. We kind of knew that that could be the case, especially after a 700-point day here. If this market's going to continue to rotate downward, bears are going to look to defend the previous session's high. Right now, testing that area right now. Not really seeing a strong high develop just yet, but if we start to see rejection of prices above the previous session's high, there could be an outside day down that develops. Are we going to see some compression here on a 2-day basis? That could certainly be the case, but right now, again, bears will look to defend the previous session's high for a potential low range outside day down. If we do get a bit more range, there could be perhaps a 400-point range on the day. So anywhere between 350 could be an opportunity for bears to defend 38,350 for a shot at perhaps 38K or maybe even 37,950. That'd be about a 400-point range today. overall, this market's still working its way downward toward 37,800, the next key market structure level below. Let's take a look quickly at Bitcoin. Bitcoin right now still developing this compression here. This is a multi-week compression. There's another 10 to 12,000 point move that could be brewing in Bitcoin. Again, we still have that large trading range that's in effect here. So if we were to break down 10 or 12,000 points, that brings us back toward the 58 to 60 zone. If we did see a rotation back into that area, it could be an opportunity to pick it back up. Right now, still building that energy at the moment and still compressed ahead of the next move. Looking at Ethereum, very similar price action, only this one big time move to the upside, holding these highs. There's about a 1,000 point buildup of energy inside Ethereum right now with an upward bias. Can this thing reach new highs? Can this thing get a new spot ETF? If so, we could be looking at a big time breakout from this range up ahead. Still building that energy until proven otherwise. All right, that is it for now. We'll see how this develops here heading into the weekend. Happy Friday. Please be sure to like, share, and subscribe. And please visit pivotboss.com/profits to take advantage of our summer flash sale for Swing Trade Pro 2.0. Take care, and I'll see you in the trading room.